Hey everyone, my name is Simon Mishevich from Optimize Accountants, and in this video we're going to be talking about house prices and are they going to drop by 35% as many people have suggested. And in my view, it's in the balance. And let's take a look at why I might just say that. The Office of National Statistics generated a report in March 2023 which suggested that house prices increased by 4.1% in the 12 months to March 2023. That's up 4.1%, not down. However, they did say it moved down 5.8% in February 2023 from March. And that's, from February 2023 to March. Now that obviously has a trend, and where will house prices end up? Many people have predicted 10, 15%, and I'm probably in that camp. Other people have said 35%, other people have said 50%. So let's have a look at where those might actually come about in terms of 35% drops and 50% drops, and we'll take that into account. We should try and take an impartial view, always. The house price index is predominantly generated by Nationwide and Halifax. Both have released their reports, which is great news because this gives me a good update to provide. And Nationwide came up with May 2023 that house prices, what they said monthly change was 0.1% down. And yet the average price, which is not seasonally adjusted, went from 260,441 in April and went up to 267,736 in May. So let's kind of almost say, well, that's not really a plus or minus. And then we have to have a look at Halifax. What did they say? Well, Halifax reported 286,532, which again, a monthly change of 0. So it's flatlining as opposed to going up and down. Now it's 2 months now of stagnation from the perspective of Halifax. So it's not going up or down, which is the seesaw effect. Quarterly change is up 1.3%, annually it's down 1%. And then you'll notice that there is significant differences between house prices and the percentages from Nationwide and Halifax. Why is that? Well, it's because they're just looking at their own pool of data. And we really have to just acknowledge that. They're not looking at Nationwide. They are looking, even though the company's called Nationwide, they are still looking at their own data sets. What I've done for you here, feel free to pause this video so you can look at all the historic months. But again, I want you to look at the bottom of the page and then go all the way up. Okay, so October 2022 for ONS was 294,996. It's now showing for March 2023, obviously a lag of 285,000, which is a significant drop. And then look at Halifax, we had 292,406. Now it's 286,532 in May with a 0% movement. And then Nationwide, we had 268,000 and now down to 260,000. So there's definitely, whichever way you look at it, there's definitely a trend going downwards. But how much by? Can we see a 35% reduction, 50% reduction, or even more? Now, this is a real indication of where house prices may end up. The big indication, when you look at the recessions in the 1980, 1981, 1990, 1991, the 2008, which is the Great Recession, property prices, even though they went down, they went back up again. And unless something's really significantly going to be different with this recession, and currently we're not in recession right now, we've still got this positive GDP, and we'll talk about that later on. But even in recession, which we're not technically just yet, then we could argue that prices will go down inevitably. We're seeing that right now, but by how much? Across all those recessions, where do you see a percentage drop by 35%? Where do you see the prices drop by 50%? I'll leave that with you to decide. But then even in COVID, we saw a recession and house prices went up because of the actions of the government stimulating property prices, and they're doing it again, aren't they, in terms of mortgages being 100%, which would be a disaster in my view, by the way, but that is potential. Now we need to look at UK home ownership and mortgages and how they could be affected. We've got owned accommodation outright, 32% own property outright, so they are cash buyers. If there is ever going to be a property price crash, those cash buyers are waiting So they're only going to be looking at the drops of maybe 10, 15, 20%, and they are going to be going in again. We are seeing institutional investors as well looking at buying properties in cash, which just shows me that when there's a deal to be made, cash buys will be there. Bank of England, what did we see with the interest rates? So interest rates is at 4.5%. We are going to be seeing an update in the next week or two. I will be providing with that update as soon as it comes out. Now, the interest rate is 4.5%, which is as high as it's been for a long, long time. There is news that it will go up again to 4.75%. Others predict that it will stay the same, and others predict it will go down to 4.25%. So there's a lot of skepticism in terms of having a consistent view of that. But again, if it goes up, inevitably that will have pressure on many homeowners buying new properties and buy-to-let property investors. Mortgage approvals, this is a great indication to see if demand is out there. Mortgage approvals again went down in April 2023 from March, but it's up from January and February. Now, that decline in April will be even worse, I predict, in May, simply because the mortgage products that lenders were giving out were pulled at the last minute. And then they put the interest rates up by 0.25% to 0.5% on some products, which is a disaster. So I expect that May mortgage approvals will be less. But again, let's not forget, there are many, many cash buys out there as well. Regional house prices, where are we seeing a decline? Mostly towards the northeast, and we've got obviously around the central England. But in Scotland, actually, we're seeing increases of property prices. So that was really telling indeed. Will that go up or will that go down? Time will tell. But again, let's keep a very, very close eye on that. House price forecast, there is already movements by trading economics that house prices will go up. There is nothing yet to indicate that prices will go down too much, according to this forecast. Let me just state that. For me, I still see that house prices will come down, and there's good reason for that. So stick around, I'll give you why I think that. But again, I will give you my view of what percentage drop we will see. But again, I am not the guru here. I'm just giving you my views. It'll be really interesting to see what you have to say as well. UK inflation went down in April 2023 to 8.7%, still significant. And let's not kid around on this. 8.7% is way above the 2% that we should be expecting to see. But again, inflation is expected to go down even further in April, but time will tell whether inflation dips up. The main thing is it's no longer double digits. Is it in control? Well, Rishi Sunak's job is pretty much on the line. Well, you could say it's going to be the end of his job anyway. But the inflation, 8.7%, has got to go down even further before the interest rates are going to be pulled down. Real earnings versus inflation. This is a real good indication. So you can see that purple band, which is the inflation, and then you've got the real wages going down. So this is not just looking at total wages and to what people are getting. People are earning more, but because of inflation, real wages means it's going down. So people are suffering as a result of all these inflationary changes, and it is pinching on people's pockets. Is it significant enough for people to give up their homes? Again, I will give you some room for maneuver on this report in a little while. Gross domestic product, again, this will have an impact on people's being able to keep their jobs. GDP is really taking a hit at the minute. We're pretty much flatlining. It says negative 0.1 in quarter 3 between July and September. But then this followed a positive growth of 0.1% in quarter 2. So, we've got to look at these movements of GDP, but it's looking pretty disastrous when you look at countries like Germany, which is a powerhouse in Europe, and yet it is now in recession. The UK could easily follow if we're not careful. Unemployment in the last 10 years, unemployment have gone up to 3.9%. But again, if you look at this line all the way going back to 2013, it's nowhere near the 7% that we saw. Unemployment is expected to increase to around about 5.5% from trading economics, but nowhere near the disaster zone back in 10, 15 years ago. So again, how much of an impact would that have on people keeping their homes? If people aren't losing their job, there's still demand out there for people, good people, to be hired in big organizations and small ones for that matter. Personal finances per household, the Money Charity, great source of data here. They're showing inflation again down to 8.7%. Unsecured debt and credit card balances, though, are both up. And this is where I'm going to be spending a lot of my energy focusing on these areas, because if more debt goes up on short-term debts, such as credit cards, loans, short-term loans, etc., then that's an indication that people can't afford to live day by day. If those balances keep going up, then eventually it's going to be such a pinch, because interest rates normally on those things are so high that people will have to think about other things, selling assets being one of them, homes being a good core choice of releasing big lumps of cash. But again, how much can we read into this? These balances aren't significantly going up, but they are going up enough for me to worry that house prices will go down even further, but not 35, 50%. Mortgage arrears and repossessions from the Office of National Statistics, claims, orders, warrants, repossessions, all up. But note, the repossessions number is flatlining. So again, we can see that people are making claims, people are going to arrears, absolutely. But are repossessions taking place? And banks can't really just take over a house and just sell it on the market, because the conditions aren't really ripe for property sales. So repossessions isn't what banks really want. They want you to keep up with your mortgage, and therefore those repossession numbers are good to read. They are up, but not significant. So all these indications are saying, in terms of UK GDP, inflation versus real earnings, which is a worry, credit card balances, unsecured, job losses, it's not really there for a 35%, 50% drops. I'm sorry, but there's a lot of people saying that, but unsubstantiated, apart from my mate in London, a letting agent or estate agent, saying it's a bad month. Yes, it is, but we've seen worse. And this data really does prove that. So yes, house prices will go down. Where do I think it will be? Yeah, maybe 15%. I think that will be a real challenge for us all in terms of house prices dipping by 15%. Not the best when you've got mortgages at 90%. That could mean that many people would have a mortgage balance that's greater than their homes. That's not nice to think about that. So let's hope it doesn't do that way. Do I think that property prices will go up in the next 10, 15 years? I think they'll stagnate for a good period of time. But we have foreign investors, again, with cash, currency exchanges, right, for them to make a good buck. The UK is seen as a safe harbor for all types of investments, property being the main one. The 2% SDLT surcharge for foreigners isn't enough to put foreigners off. They're still buying property. So it's not just the UK people that we need to look at and say, well, none of us can afford homes. It's not just them. We have to think about foreign investors, institutional investors that are buying up property. I think that will just make sure that the property market is going to be relatively stable. I still think there's going to be a drop, but I don't think it'll be dropping by 35 or 50%. But again, I'll be interested to hear what you think.